stock trading and option trading. When I was much younger, much younger, when I was young, I made my living playing blackjack. I lived in Las Vegas, and I played blackjack in casinos, and I was what's known as a card counter. Now, card counters aren't we're not actually counting individual cards. Card counters track the cards as they're removed from the deck, and we give values to low cards, 2, 3, 4, 5, 6, 7, and another value to high cards, 10, Jack, Queen, King, Ace. And the theory behind it is, and this is a mathematical edge that we have, is when the little cards, when the small cards, deuces through 7, are removed from the deck, it throws the advantage to the player. And when the big cards are removed from the deck, it gives the house a bigger advantage. A flat deck, the casinos start with about a 0.3% percentage profit percentage in their favor. But by tracking the cards, we get a mathematical edge. And what I did was, when the edge was in my favor, in other words, when the little cards are removed and the composition of the deck was a lot more big cards than it normally would be, we increased the bet sizes. And we had a basic strategy we followed, and we bet big when it was in our favor, and we bet minimum when it was against us. And that's a mathematical edge we have. All right. Now, the reason I point this out is, if you've ever talked to anybody about that you wanted to trade stocks, or you wanted to trade options, a lot of times you'll hear from friends and family that you're just gambling. You can't beat them. It's gambling. You might as well just go into a casino. And the reason this is interesting is trading stocks and options is very similar, in that without knowing what the institutions are doing, the trader has no edge. In essence, they're gambling. So if you're trading without a methodology and not able to know what the institutions are doing, you in essence are gambling when you're trading stocks. All right. But if you've got an advantage, you just like card counting. Once you have a methodology that helps you identify when institutions are the trade, and that's what the SPY super system does for it. I call it my card counting system, because it gives me an edge over the other traders, allowing us the ability to become consistently profitable, because we now have a mathematical edge over the other retail traders in the world, right? And the SPY super system, in conjunction with identifying the highest probability trades, can lead to consistent profits. This is once we identify when the institutions are in there, then we want to find the best trade, the best stock to trade based on those conditions. All right, so that's and we're going to go over all that criteria. But that's why I brought this up. Is trading stocks and options gambling? It is, if you don't have a methodology and strategy that you can follow, and you aren't able to identify when institutions are in the trade. Okay, in the room and on the alert service, I have a couple of simple rules to trade by. First thing is we trade the best and skip the rest. Well, we're going to go over how we find the best. I mean, this sounds very easy, but you have to be able to identify the best. The skipping the rest is something a lot of people overlook on how important this is. If you don't take a trade that was going to end up being a losing trade, that's just as good as taking a winning trade. And this is really important. So we don't take any trades that the institutions aren't in. And there's other criteria that we'll talk about as well. And the second thing is, our objective is not to make trades. Our objective is to make money. And the whole point of this statement is to try to discourage people from retail traders from over trading. It's one of the biggest drawbacks for retail traders is trading too much. They'll be sitting at their computer. They haven't made a trade in an hour. They feel like they got to make a trade. They'll start to justify finding a trade. It may not be a very good trade, but they're going to find a way to justify it and take it. So I point this out every day. Our objective is not to make trades. Our objective is to make money. And it's important to keep that in mind. So how do we do this? Well, maintaining discipline is critical. And maintaining discipline means understanding what the criteria for identifying a high probability trade setup is and sticking to it. Too many traders will have a winning strategy, and then they'll have a couple of losing days or a losing week, and they give up and they just jump to another solution. They'll go out on social media, they'll read about something else somebody else said, some stock they recommended, and then they basically just throw them to the wind, and they start looking for another method, and they go from method to method to method. It's important to learn and follow the process that we talk about here. How we find high probability trades. You learn and internalize that and stick with it, because every strategy that I use in the room, I've tested and run on live money. I don't do any back testing. I do this with live money and I do at least 100, 200 trades with those strategies to make sure that it produces at least an 80 or 85% win rate minimum. I don't take anything that's a 70% win rate or a 75% win rate over hundreds of trades. All right, so anything that we have typically is going to have an 85 to sometimes 90% win rate. So that's the process that you have to learn and follow that first. Then remain patient. And this is, again, very difficult for retail traders to remain patient. They just feel like they've always got to be in a trade all the time. It's always important to remember, cash is a position, right? Not taking a trade sometimes is the best trade. Be patient, wait for the trades to come for you. Make every trade count. Make sure that they're high probability trade setups. Okay, now as profitable traders, obviously, we need an edge over other retail traders because this is who we're trading against. Don't deceive yourself and think we're taking money from institutions. We're not. We're taking money from the other millions and millions of retail traders out there who don't have as good information as we do and don't have the knowledge and indicators that we do. So our edge is the SPY Super System software. This piece of software is the main thing that drives up our profitability, and you're going to see what the profitability is like. This drives the profitability because we know with this when the institutions are in the trade and when they aren't. The next thing is we trade relative strength and relative weakness. Another very overlooked criteria that a lot of retail traders don't think about, and this doesn't mean RSI. What this means is if you've got a stock that you like maybe you like Apple, and the market's going sideways and down, and the stock you like Apple, is stacking green candles on the 5-minute chart, it's got relative strength to the market, which means it's going to outperform the market. If the market turns around and heads down, it's not going to fall down as much. It may even keep going up. So we trade stocks with relative strength to the market or relative weakness for shorts to the market. This is a really important criteria that a lot of traders don't take advantage of. We want to trade with the market trend if there is one. And sometimes the market, yesterday was a very, very choppy day in the market. There was no trend, so you had to focus on individual stocks. And then buy near support and sell near resistance. This is a critical criteria. When you see a stock moving really fast, this is what a lot of traders suffer from FOMO. They'll see a stock coming out of the gate in the morning and stacking green candles, and it'll be up 3, 4, 5, 6% after the open. And they get antsy and they want to get into the trade. They feel like they're losing money because they're not in it, and they'll jump into it where it's way, way away from support, and it'll turn around and trap them in it. Now they got to sit there and wait for it to come down, and then they don't know whether to get in or get out. Their loss is going to be too big. So what we do typically is we wait for a stock that we like to come back to a support level, and we'll go over those and bounce off of that and confirm that it's going back into the original trend. So we're getting in near a support level, which means if it goes against us, our loss is going to be minimal because we're very close to that support level. And same thing, selling near resistance. This would be selling near resistance if you were taking a short. The stock comes up, it gets near resistance, it turns around and heads back down again. That's the way you would get in. You can also use this when you're in a long and you're going long and the stock is getting near a resistance level on the chart, getting near the 100-day moving average or the 200-day moving average. That's where you're going to sell. All right, so those are our edges right there. And the compass system, which is now called the SPY Super System. It used to be called the compass system. It's been enhanced. We're going to take quite a bit of time to look at that. It identifies the highest probability trade setups while sidestepping setups that look good but will fail more often than they succeed. This is trade the best, skip the rest, capsulized right there, right? And the system, SPY Super System, does this by identifying when institutions are driving the move and when they're not. And this is what gives us such a big edge. And the compass software, it's actually called the SPY Super System software now, it analyzes some fairly complex trading information, trading data, but it displays the results in an easily identifiable visual format. And this is really important because if you can identify whether institutions are in the trade or not, just by looking at a quick chart, and basically it's being identified by colors on indicators, that's going to help you a lot. And this visual element, this makes it possible for even new traders to find high probability trade setups. It's really great for a new trader trying to learn how to trade because it's gonna compress the amount of time they need to learn to start to become profitable. And listen, it takes time to become profitable from starting from scratch. It does. Let's not deceive ourselves. Trading is not easy. You might have heard about it on webinars before, or that you get an email about how you can turn $5,000 into $5 million. This is trading is not, you're trading against a lot of other traders out there. You just need something better than them. And this is what separates from everybody else. All right, so how do we get an edge over other retail traders? Well, we pretty much covered that. We only take trades that are being driven by institutions. We take trades that trade stocks that have relative strength or weakness versus the SPYs or the Qs. Don't confuse this with RSI. I don't use RSI at all. All right, I don't even look at RSI. I don't look at MACDs. I don't look at any of that stuff. I just use the indicators that tell me whether institutions are in the trade. And then we trade in the direction of the overall market, if there is a direction, okay? And how's it give it an edge? Obviously, our trades are going to be supported by institutional buying and selling. The stocks will be outperforming the index, and they'll be moving in the direction of the overall market. This is our edge. All right. Now, the SPY Super System software, I just want to, before we get into the details of everything, I want to focus on something here, because I'm going to show you the results that we've had over the last two or 3 years. I'm going to show you monthly results, specific trades. And I want you to understand that the SPY Super System software, this is the critical element in finding and trading the highest probability trades. This is what drives our results. The SPY Super System software, it's the engine that drives our exceptional results. Now, you know, I consider myself a really good technical analyst, and I can look at 3 or 4 different trades and try to find the best one. But I've got to have this to tell me which ones I have to start out with for the highest probability trade setups. And then I can apply some technical analysis to it. And the ability to identify when institutional players are driving a bullish or bearish move and when they're absent is the key factor in pinpointing high probability trade setups. Remember, there's institutions trading all the time. All right, they just don't not trade, and they're trading all the time. But this methodology here, the system, what it's finding is when there's a confluence of institutional trades pushing a trade in one direction. You know, they're not offsetting each other. There's a majority of institutions in there pushing a trade in one direction. That's what pushes it. Okay. And again, this is what the function of the SPY Super System software is, and it's a critical component in producing the results that we have. Right. So keep that in mind. All right. By the way, I do trade on YouTube every day at about 11 o'clock for about an hour. You can come to the YouTube live stream off of Bright Line Trading. I start about 11:15. What you'll see is exactly the room gets shared. You'll see the room. You'll hear all of the discussion I have in the room. You see the charts that I put up there. You can get a chance to look at it. So we have a lot of people in there every day coming to watch. Now this is something. I want to focus on one thing here. I did a video on the 11 most common mistakes that retail traders make, and this is a slide I use for one of those particular mistakes that they make. And it's a big mistake. This is from Stephen Hawking. The greatest enemy of knowledge is not ignorance, it's the illusion of knowledge. Okay, think about that for a minute. Think about how a lot of traders, when they're sitting there, they're reading social media, they're listening to CNBC, or they're listening to Bloomberg, or they're reading some article, or they're out on Wall Street bets. There's people are getting information that's bad all the time, right? But they think they know something that they don't know. And this is where the greatest enemy of knowledge is not ignorance. If you didn't know anything about this, you'd be better off than having the illusion of knowledge. So trading what you see or what you hear or what you think instead of trading what the technical setups are on the charts is going to be a killer. And that's one of the main mistakes that retail traders make, is trading what they hear, think, or see, and they get an email from somebody, they go out on social media. And keep this in mind. Trading what you think is right when it's wrong, you have the illusion of knowledge, and you're trading, you're going to trade very, very poorly. Okay, this is, I'm just going to show, this is the actual SPY Super System here. This is a 5-minute chart on the Qs. I just kind of want to show you, before we get into this too much, what's on here that's important, right? We have down here, this is the actual momentum oscillator that we use. Now this oscillator is different from most oscillators, is that we strip out the divergence out of it. It's just complete momentum. This is just true momentum. All right, and momentum, I'll probably cover what it really means. Some people think just because the stocks get green candles moving up, it has momentum. That's not necessarily the case. So that's the oscillator. This is the current time frame momentum. On a 5-minute chart, this would be the momentum for the last 5 minutes. If it was a daily chart, this would be the momentum for the day, for the daily chart. Right, so this is current time frame momentum. This is multi-time frame momentum. This is 3 different time frames. On the 5-minute chart, this is the 5, the 15, and the 45. And a daily chart is the 1-day, 3-day, 9-day. So this is what makes up these momentum indicators, and these are very critical. And if you look at the colors, red and yellow is, and we see a lot of these. Red and yellow is bearish. Blue and green is bullish, and they change as the momentum changes. This is the long-term trend right here. Again, this is going to be red, blue, yellow, or green, a long-term trend. So this is on a 5-minute chart. So those are the indicators. These are the ones you're going to focus on the most right here, right? Now, up here, we've got some lines that are really important. Now, this is on a 5-minute chart. So this is what's important on a 5-minute chart. This is the VWAP. This is the volume weighted average price. And you can put that on any chart, you can put it on there. This is such an important level that all the institutions use this. All the institutions trade off of VWAP. They buy at the VWAP, they sell at the VWAP. You've got to have it on there. It's a support resistance level that we use for entering the trades and exiting the trades. If you're going short a stock on a 5-minute chart, you don't want to go short until it breaks below the VWAP. Then you can go short. Now this other line here, this 15, this red line, that's 15 EMA of an EMA. This is a smooth EMA. We use this for support and resistance levels if the price has gotten away from the VWAP. It's gotten further away from the VWAP. This can now become our support resistance level to get into the trade, right? So these two are critical on a 5-minute chart. These are not critical on a daily chart. And this is a pivot point. This is the only pivot point we have. That the pivot point is produced by the SPY super system. They're very, very strong support and resistance levels. Again, I don't enter them on there, but if I'm in a trade and it's coming too close to a pivot point, I get ready to start to take profits. All right, so that's the pivot point. We also have these things called pop signals, pop out of the box signals. These are compression breaks. These tell you when a stock is breaking compression to the downside or a pink breaking compression to the upside. All right, so these are the indicators that can help you in a trade. If you were getting into a trade here as it broke below the 15, you could take it right here, but you have to be aware of the pivot point. You see how close that is to that. So that's what the SPY super system looks like. Now, one other thing, just recently we added another indicator to the top of the chart here. And the top of the chart, this says bold trend down. This tells us what the current market momentum is on the 5-minute chart. This tells us whether the overall market is moving up or moving down or just chopping around. This is basically looking at cumulative volume for all the whole New York Stock Exchange. It basically takes all the up volume, subtracts all the down volume, and makes a determination of whether the market is bearish or bullish. And this is very helpful because it's going to tell you if this thing is trending down and it goes red and is trending down, you probably want to shy away from taking anything long right then. You probably want to either focus on shorts or wait till it switches back to going long again. And on a day where it just stays down all day or up all day, you've got a nice trending day to take advantage of. So that's a new indicator that we've just added to it. It shows up right on the top of the chart. So you have a question here for David. Does the multi-time frame change colors based on 3 momentums on the 3 time frames? If the multi-time frame has an upgraded color change before the signal time frame, what does it mean? Well, you're talking about these things here. Yeah, this is going to be looking at, on this Google, for example, this is looking at on a 5-minute chart. It's looking at the 5 to 15 and the 45, and it's looking at all 3 of those the momentums on all 3 of those time frames. So this could be red. Notice how this is red here. This is telling us that those 3 time frames the last time it looked were red. In other words, they're not all going in the same direction. But we now know that the 5-minute is changing to the same direction. So this is telling us that the momentum is starting to move up. You can see that it is here on the 5-minute chart, but it hasn't followed through to the 15 or the 45 yet. Once you get a little bit more bullishness, then this will switch over. First, it'll switch over to blue, and then it'll switch over to green. So that's what's telling you. Typically, this is going to change first before the multi-time frame does. Okay. Hey, Ramkumar, how are you? When the pop signal is there, ideally, what do you say here? We ride it all the way to the pivot point. If there is a pivot point, Ramkumar, you have to make some, listen, there's some subjectivity in this. It depends on, you don't have to wait for it to go all the way to the pivot point if it was coming down. If it starts to bounce back up again and you're short, you're going to take profits when the momentum ends if you're in just a quick 5-minute trade. It depends on whether you're in a swing trade or whether you're in a 5-minute intraday trade. Okay, so that's the new indicator. This is a nice one. Right Line's added it in there for us. It basically tells me what the current market momentum is, what the market internals are telling us. I used to just flip back and forth in charts, but this way it makes it much easier to see. All right, and just kind of show you a couple of charts. So this was a daily chart in NVIDIA. I kind of want you to see how this works. Here's where we took an NVIDIA trade right here. You see how that it's all green. Market's green. Current time frame momentum is green. Multi-time frame is green, and trend is green. Everything's green on this thing, right? So where do we want to get into it? Well, it was a little bit extended here, but it pulled back. See how it pulled back? This is what's called a PBO, or pullback opportunity. The stock is moving up, and it pulls back to a support level, the 15 EMA, and then we grabbed it right here as it turned green this day. And we took NVIDIA, and we got a beautiful trade out of NVIDIA. This is where we get out of it on this pop right up here that next morning. This is a day trade. This was an intraday, not an intraday. This was a swing trade that we did in NVIDIA. We took 32% on this, got in 8.4, get out 8.7. Just so you can see, I'm going to show a lot of these, but I want you to see that we're trading it long. The institutions are buying the heck out of NVIDIA at this point in time. And it's really easy to see that. See how they were selling over here? Just this stayed green, but the daily switched to yellow. So there was a little bit of selling going on, but it hadn't impacted all the other indicators yet. And then it switched blue, and then it goes right back to green again. Okay, and this was an SMR trade we took here, another swing trade. Again, I need to take that off of there. That doesn't belong. This is where we get into the trade. This was earnings. See how it's yellow here? It's bearish, switches to buying right here. Multi-time frames already buying. Switches to green. We take it right here, and then we took this and we get in the 13th, out the 15th right here, and we got a 56% profit. This was a pretty big profit on SMR. And if you did 2,000 invested in that, it produced 1170. All the results I'm going to show you are going to use $2,000 invested in each trade. Now, not everybody does that, and I don't even do it. I don't use the same amount for each trade, but I have to have some sort of a basis for being able to show comparative results, week to week, month to month, etc. So that's what we always use. All right, this was another trade. This was a 5-minute trade on Tesla. Here's Tesla right here. This is how it opened on the morning right here. It popped up through the VWAP. See the pink line, the VWAP? Notice it's buying right here. So we wait for it to break the VWAP to get in right here. Right? As long as it stays above the VWAP, you stay in the trade. As long as it stays blue or green, which it does, you get in, you get in, you get in. It starts to lose momentum right here. We exit right here. You see, we get out here. Now, if you waited, you could have exited when it turned back to yellow again, but right here is where we get out of the trade. That's a fairly quick trade, about 4 or 5 candles, but a nice profit. All right, and this is a SPY trade. This is also an intraday trade. We do a lot of these SPY, what's called SPY super system trades, where we're trading the indexes, the SPY, the Qs, the IWM on a 5-minute basis. Most of the trades we take for the alerts, and most of the trades in the room are longer intraday trades or swing trades, overnight trades. But we do a lot of SPY super system trades that I'm going to talk about. But notice here on the SPY, you see how it's running along the VWAP. See the pop out of the box symbol right there? It's breaking compression. See how it went from selling yellow to buying blue. And we don't even have to worry about the multi-time frame when we're just trading off the 5-minute chart. All right, this is how we take it right here as it breaks above the VWAP. As this goes from selling to buying. We could even take it if this was red. This wouldn't matter. This is what we're interested in when we're trading off the 5-minute chart. You notice how it stayed above the VWAP, and then it started pulling away, and the 15 now becomes your stop. And then you're just watching this until it starts to lose momentum, and then you exit the trade right there. Even though it stayed green, you could have stayed in it. But like for me, I would be taking profits right there. Okay, and this was a Wendy's. This was a intraday trade. I'm sorry, swing trade. This was on a daily chart. If you look at it right here, this was earnings. This is where we see how it went to red right here. We took the trade right here early on, and when it went to red, and took nice profits in Wendy's. We were only in this overnight. That's all, right? In and out. Okay, I think we got a couple of questions. Here. When the pop signal is there, oops, sorry. How do I find stocks to trade? Scanning, yeah. I have scans running all the time on I think a swim platform, but I also use TC2000. I have quite a few scans that run in TC2000 where I get a lot of my trades from. But in the room, I've got people posting trades all the time that they like that are looking at other scans. I mean, you can't be looking at all the stocks, but I do run scans on TC2000, and I have scans going that I'll show you what they look like on Thinkorswim. I've got scans for relative strength, relative weakness, a scan for looking for swing type trades, trades that have pop out of the box signals occurring, all those kind of scans. All right, and this is just a little funny graphic to throw in here. What I'm trying to indicate here is one of the biggest drawbacks for retail traders is trading with emotion. And this is kind of what you look like when you're trading with emotion. This is somebody that had FOMO in the morning, jumped into Netflix because he heard that it was gonna go up 20% today. He gets in right near the top at like 9:45, and this is where it is at 9:60 at 10 o'clock as it falls right back to the support levels again, and they're down all kinds of cash. And this is what people do. And if you're trading your P&L, if you're watching your profit and loss on an ongoing basis during the day, you're creating emotion in yourselves. You should just be trading off the technicals. When you're getting into a trade off a technical setup, you should be getting out of the trade on a technical setup. You should not be looking at your P&L. Now, once you're in profits and you think you want to be able to get out of the trade, then you technically look for some momentum to slow down. But you don't be saying getting in or out just because you're up or down money. All right, you want to do it with a technical reason. And again, this is what happens if you've actually got the software and you understand what the institutions are doing, and you get in when the stock pulled down to support and then bounced. This is the guy that got in at the high. This is the guy that waited for it to bounce and then got in and took profits. While the other guy's trying to figure out how he lost money on a stock that was green for the day. Okay, before I get into Heiken-Ashi, I just want to cover something here. And this goes right back to what we just talked about on P&L, not watching a P&L. Process precedes results. You've got to learn the criteria in the setup structure, the methodologies. You have to learn that and internalize that before you can go on to worrying about your P&L, right? So you got to learn the high probability criteria and strategies. That's got to come before focusing on results. If you're focusing on results, and I hear this all the time, I've been trading a year, and I made money this past week. That doesn't tell you anything. It tells you nothing, because focusing on results without having a solid process to follow is going to end up in failure. Because you can have an excellent trade that doesn't make money because they'll fail, and you can have a terrible trade that makes money. And all taking a terrible trade that makes money, all that does to you is reinforce a bad habit or a bad structure. All right, so this is important. This is just something I threw in here for when you get the replay. You might want to think about it. This is called the OODA loop. This is basically just a mental process you go through, that I go through when I'm looking for a trade. It's called OODA. The military uses this. Corporations use this. Observe, orient, decide, and act. Basically meant to make you focus on exactly the process. I use my scan, watch list, and news to identify the prospects. Then I orient by taking a look at the prospects, identifying whether the prospects meet the high probability criteria on the daily and the 5-minute chart, identify support and resistance levels, know my next earning date because I don't want to trade over earnings, and then check the option chain for pertinent information. That's how I go through and determine which one of these stocks are the best. Then I make my decision on whether the trade qualifies as a good high probability trade setup, and if it does, I act to make the trade, try to avoid analysis paralysis. Okay, once you've got that down and you got the process down, it'll be much easier. And once you stack up some wins, you're going to start developing some confidence. All right, basic high probability trade setup funnel. This is a virtual funnel. Obviously, this is a mental process I go through. First thing I look at when I'm going to take a chart to trade. Now, this isn't for SPY Super System intraday 5-minute trades where I'm just going to be in the trade for 5, 10, 15 minutes. But this is anything where I'm going to be in it most of the day or overnight or 3 weeks. The first thing I do is I look at the daily chart. If I would like a stock long and the daily chart's doesn't have a bullish component to it, I'm not going to trade it. Daily chart's got to be bullish for me to go long and got to be bearish for me to go short. And then I look at the 5-minute chart to try to get my best entry. We want to trade with the trend, both the stock and the market. If you got a trending market that's moving up, you mostly want to trade long. If you got a trending market that's trading down, you mostly want to trade short. And then what's called context, which is looking at the chart on a stock over the last several days or several weeks to see if you can discern some pattern to it. And then the SPY super system must align. This is the killer right here. This is the main one. If you like a stock long and the SPY super system is not coming in green or blue, you can't take the trade. You have to avoid the trade. And if it's going to be a swing, that means the multi-time frame and the current time frame momentum both have to be bullish or bearish. This is critical because we want to trade when the institutions are in there. We don't want to be in there when they're not. And then you look for relative strength and relative weakness. Maybe you have 4 or 5 stocks that meet this criteria. Find the one with the best relative strength for long, best relative weakness for short, and then try to enter near support and sell near resistance. That's the whole process right there. If you do this, you're going to be ahead about 98% of the other retail traders in the world. Okay, and again, this is the funnel method we just talked about. I just wrote it out here so you can read it. But again, the key here, SPY super system indicators must align in the direction of the trade. The stock to be traded should have a daily and 5-minute chart aligned. You don't want to be going into a long, entering a long on a swing type trade. If the daily chart, if the 5-minute chart is bearish for a day, you want to wait for it to get back to bullish again. Wait till the price gets above the VWAP on the 5 and enter there. All right, so you want to align these two. Okay, and there's obviously stocks should have relative strength, relative weakness, but have patience is really, really important. This is all about waiting for the setups to come to you, not rushing into trades. Just wait for them to set up for you. Now, in the room, and we're going to get to Heiken-Ashi here in just a minute now. And in the room, these are the strategies that we use: straight calls and puts, straddles and strangles. Straddles and strangles, I don't know if you're familiar with these. These are non-directional trades where you're looking for the stock to make a big move, either up or down. You don't care which direction. And I have some specific criteria for that. But these work really, really well. I did one on CoreWeave this week that was just absolutely beautiful. I didn't care which way it went. I just thought it was going to make a big move, and based on the technical setup. We do debit spreads using weekly options expiration. This is a debit spread. If you don't know what that is you for example, if you're a call debit spread, you buy a call and you sell a call at a higher strike price to create the spread. It reduces the cost of the trade to you. But I always use this week's expiration on debit spreads because my research over my own trading over the last several years shows that debit spreads using weekly expirations have a much better ROI than anything that goes out 2, 3, or 4 weeks. I use something called time spreads over earnings. This is a non-directional trade where we capture the volatility crush on a stock that generates earnings. We had 2 of these this week, both very, very profitable this week on some time spreads. And there's some specific criteria that has to be there for you, right? But basically, what you're doing is you're capturing the volatility crush once earnings come out. Before earnings are announced, the market makers, they jack up the price of the puts and the calls to protect themselves because they don't know which way the stock's going to go and they don't know how much it's going to go. They kind of estimate where they think it's going to, what percentage it's going to move, and then they set the premiums based on that. So our job is to capture that volatility crush that comes out of the option premiums once earnings come out, because then they reduce the premiums because now they know which way it's going to go, and that's what time spreads do. They're also called a calendar spread, and I've had very good success with this. We had a couple of really nice ones this week. I think we had one on applied materials. We actually took around lunchtime, and we were able to get out for 25% profit before the day even was over, so we didn't even have to take it over earnings. Then I have a thing called the weekly ATM strategy. I haven't been able to use it very much lately. This is on a neutral to bullish stock. where we sell puts every week to bring in premium while maintaining a much longer dated put with a lower strike price to protect ourselves to the downside. All right, and credit spreads, we capture premium using credit spreads. We have one on Microsoft right now. These are nice ways to bring in credit. They don't take a lot of management. They're easy to trade. And then this SPY super system, these are for the 5-minute charts, 5-minute trades. These are very quick trades, right? These are SPY super systems, very high probability trades to catch the SPY, the Qs, the IWM, or futures. People trade these to use futures. This is a great methodology, but I can't call them out in the room because it's too quick, and I can't post them. So I don't include these in the results I get on a monthly basis or a weekly basis, but we do look at them in the room. I point them out if I see them, and I will take a bunch of these. But the reason I point this out is a lot of traders like to do these. You can take a lot of trades during the day that they will all be high probability trade setups using the SPY super system. But again, the results I have for this are just going to be what my results were, not for the room. Okay. Now the alert service, just to follow up on that, it's designed for day trades and short-term swing trades. I don't want you to think that this is an investment service. We're not out there trading, giving you stocks that you're going to hold for 2 or 3 years. These are stocks that you're going to hold for a day or two, maybe 2 or 3 weeks at the most. It's obviously designed for traders who can't watch the market all day. It puts out real-time alerts on the highest probability trade setups, and the highest probability trade setups are, guess what? Trades that the institutions are in, and how market internals are also bullish for us, and we're going long. And then I do technical analysis to find the highest one. This is where they come from. So the SPY trades are not called out. What I do is I mention the setup. If I see a SPY trade that's setting up and I'll tell you if I'm going to get into it or I got into it. But they're very, very quick, so I can't post them anywhere. I can mention them in the room verbally, but I can't post them. People would like me to post them. They're too quick. By the time I put down, SPY long, then it may have already moved. Within 3 or 4 minutes, it may have moved enough that I'm actually out of the trade. So I can't call them out. But I do have a video on them on how to find the setups, and I'll show you them on the chart when they show up. Because I've got a lot of people trading these things now, because that's what they do. They basically sit there all during the day when they're in the room. They come in the morning, they trade SPY super system trades. They come in the afternoon, they trade SPY super system trades, because you can get quite a few. Now yesterday there wasn't very many because it was a very choppy day. There was no trend, but some days it can be a lot. Okay. This is my equity curve. I mean, this is just shows January through July of this year. We've had a good year. I mean, we had a really, really good July that I'll show you. But this typically looks like this each year. I mean, this is kind of, you want equity curves, obviously, they go from the bottom left to the upper right. This is based on $2,000 per trade in the room. Okay. All right. So now we're going to talk about Heiken-Ashi candles here. Does anybody here actually trade with Heiken-Ashi candles, or do you use them in your trading now? I'd just be curious if you do or not. I use them. Yep, you do. Yeah, Doug does. I know Doug does. Yeah. Alien, yep. Okay, good. Bob, okay, excellent. So you're using Heiken-Ashi. So let me. This may be redundant to you because I'm going to go through Heiken-Ashi setups and how you use them. Yeah, a lot of people using them, and that's great. Again, on a Heiken-Ashi candle on a 5-minute chart, if you're looking for an intraday trade, they're more effective on a trending day than they are on a choppy day. I'll tell you this, because on a choppy day, a lot of times by the time the Heiken-Ashi reversal candles is formed, a lot of the trade may already be over because the day's so choppy. So when it's choppy, I typically stick with the regular candles. If it's trending, then I'll use Heiken-Ashi candles, and I definitely use Heiken-Ashi candles for swing trades. All right, so here we go, using Heiken-Ashi candles with the SPY super system. Right, so here's a Heiken-Ashi chart. These are Heiken-Ashi candles right here. This says British pound, Japanese yen. This is just a slide I took to show you the structure of Heiken-Ashi candles. Right now, these are bearish Heiken-Ashi candles. You notice there's no, they call it upper shadow. I call it there's no wick on these things. The flat top flat top, flat top, flat top, flat top, flat top. That's a bearish Heiken-Ashi candlestick trend right there, right? These are, every candle has a flat top on it. That tells you it's very, very bearish. Okay. Now, notice that each candle starts in the halfway down the previous candle or halfway up the previous candle on the bullish side. They always start halfway up of the halfway in the halfway point of the previous candle. That's because of the way they're constructed. They're made up of two candlesticks, right? But so this is a bearish trend right here. This is a bullish trend over here. See the Heiken-Ashi candle right here with a flat bottom. Flat tops are bearish, flat bottoms are bullish. That's something you want to make sure you understand. This is what's telling you it's bearish. This is what's telling you it's bullish. Bullish trend, bearish trend. Right. So one of the best ways to use Heiken-Ashi candles is to identify when you get a reversal from, let's say you want to go long, whatever this particular instrument happens to be, and it's coming down, but you're bullish on it. What you want to get is you want to get in on what's called a Heiken-Ashi reversal candle to the bullish side. So you're watching it be bearish, bearish, bearish. It comes down to support. This is a Heiken-Ashi reversal candle to the bullish side right here, okay? But caveat, when your reversal candle, Heiken-Ashi reversal candle, is smaller than the candles that created the original trend, that's not a good reversal, right? It may work for a bit, but it's not a good reversal. It's not as a high probability as the next one I'm going to show you. So if you get in here, you probably would have made money on it because you got another flat bottom here, and then you get wicks and tails, then it reversals back to a Heiken-Ashi bearish reversal here. Now this is what I'm interested in. You see how this has come down, chopped around, and this is a Heiken-Ashi reversal to the upside, and see how big this Heiken-Ashi candle is, right? This is a big Heiken-Ashi candle to the upside. This is the Heiken-Ashi reversal candle that you want to get in on right here. And you typically don't have to wait for the whole candle to form. If you're in a 5-minute candlestick, 3 minutes in is usually plenty. If it's got a flat bottom after 3 minutes, it's going to have a flat bottom after 5 minutes. So this is where you can enter the trade. And notice how beautiful this trade was. Flat bottom, flat bottom, flat bottom, flat bottom, flat bottom. Just keeps moving up, starting to get wicks and tails, then another flat bottom. A beautiful bullish trend. And this is where you would start to think about getting out. You got a red candle, you're starting to get wicks and tails. Time to take your profits because you got a nice profit, right? So that is a Heiken-Ashi reversal candle right there. And that's what you're looking for. So the distinctions of the Heiken-Ashi candles, and this is important. Bullish Heiken-Ashi candles have flat bottoms. Bearish Heiken-Ashi candles have flat tops. Bullish Heiken-Ashi reversals are identified by flat top Heiken-Ashi candles, followed by flat bottom Heiken-Ashi candles. Now there can be doji candles in between, but that's how you identify the reversal that we just looked at. And bearish reversals are identified by flat bottom candles, followed by flat top candles. That's how you find Heiken-Ashi reversals. Now, one of the important things about Heiken-Ashi candles, and I'm going to reiterate this again in just a minute, is a Heiken-Ashi candle, because of its structure, it's made up of two candlesticks, it inherently is confirmation of the reversal. If you were just looking at regular candlesticks, usually you have to wait for a couple of candles. You know, if you're coming down and bouncing off the support level, one candle bouncing off support level is not confirmation when using regular candles. One Heiken-Ashi candle that bounces off of a support level, that is a confirmation. See, it's built-in confirmation. All right. So just some information on Heiken-Ashi candles. They evolved from Japanese candlesticks, obviously. They combine the open closed data from the previous period with the open high low closed data from the current period. That's how they're formed. Okay. And the fusion marks minimizes noise, provides a clearer depiction of prevailing trend. You're going to see that it's much easier to see trends with these things. It's going to eliminate a lot of the noise that would shake you out of a trade otherwise. Okay. Heiken-Ashi translates to average pace. That's fine. All right. So that's just some information on it. Here is just what we just looked at a minute ago. All right. So here is what it looks like. Let's say, for example, this blue line was the VWAP, and you wanted to get in long when the stock got back above the VWAP. So it's coming down, right? Bearish, bearish, bearish. Then it flips around, goes bullish, but you haven't got above the VWAP. Now you get a Heiken-Ashi reversal candle right here above the VWAP. This is where you would take the trade. That's how you find it. And you get a little red candle, but you're staying in because you're above your support level, and then you ride it right up. and then you get out right here as it turns down again. That's a Heiken-Ashi reversal, breaking above support levels. That's what you're looking for. This gets you into the trade very, very easy, quickly. You're getting in very, very early. Okay, question here. Come on, for bullish setups, is it necessary to move from flat top to flat bottom like Heiken-Ashi candles? What if we move from a normal bearish, not flat top, to a flat bottom bullish reversal? Yeah, because the ideal way is that there should have been some flat top ones before that, but the actual candle, when it switches from one to another, you don't have to have a bearish Heiken-Ashi followed by a bullish Heiken-Ashi. You can have some bearish candles prior to that, followed by some dojis that have wicks and tails on them. Then you go to a flat bottom. Okay. Okay. And this is just tips for using Heiken-Ashi candles. These are the same tips you would use for anything. Make sure you know where your support and resistance levels is, right? Don't be getting into trades that you're going to bump into resistance level in 10 cents. Right? You don't want to do that. Align the trend with the current market trend if you can for increased success, obviously. Choose relative strength, relative weakness. Monitor the Bollinger Bands. You really don't have to do that anymore because we've got those pop out of the box signals on the SPY super system. And after entering the trade, switch to standard candles. What I actually do is when I'm thinking of getting out, I switch to standard candles so that I can identify the end of the trend of the momentum starting to fade quickly. So I'll be able to get into them fairly quickly. I get out of them fairly quickly. Okay, so again, here's your Heiken-Ashi candles. Flat bottoms for bullish, flat tops for bearish. We talked about the reversals. This is the most key thing for using Heiken-Ashi candles, that you can identify that trend and the reversal in the trend. Again, smooths out price action, reducing noise. Very, very good use of Heiken-Ashi candles. Makes identifying trends much easier. Improves identifying confirmation of trends or trend reversals that we just talked about. This is probably the most critical thing to be using for Heiken-Ashi candles. And again, it helps identify potential exits when the candle's body shrink or the reversal occurs. All right, I'm going to show you some real charts in a minute, but here's a chart of Uber just so you can see. This is a fairly old chart, but this is, if you look here at the May 1st date, right here, you see this gap up here, and then another gap up, and then a nice bullish move into Uber. These are standard candles. Let's take a look at what Uber looks like with Heiken-Ashi candles at the same time. There's May 1st, right? See, here's where you see this Heiken-Ashi reversal candle right here, bearish candles, bullish candle right there. All right, flat bottom, flat bottom. This is where you went into the trade, right here, and a flat bottom. Then you'd be in it on May 1st, and this is the move, and you would get out right here as it starts to flatten out. You see, the candles went. This is my TC2000, by the way. That's why these candles are colored differently. I color them based on Bollinger Bands expanding, but these are green candles, and then you go to a red candle. This is where you would get out of the trade. See that nice reversal? See, so you're catching this by getting in here because this candle created a Heiken-Ashi reversal candle right there, right? And that's Uber. Okay. Okay, David, when I get close to closing a trade, I switch to regular candles on the same time frame. Yeah. Well, listen, when I'm getting ready to exit the trade, I'm typically going to get out of the trade on the 5-minute chart. All right. If I get into a swing trade, I'm using the daily chart for my setup. Once I've decided I'm going to get out of the trade, that I think the momentum's starting to wane, then I'm going to switch to the 5-minute candlesticks and try to get out at the optimum time on the 5-minute candle because I'm not planning on holding it overnight again. Okay. All right, so that's Uber. So I'm going to look at some live ones from Friday here. So I'm going to bring up the SPY Super System software here. Okay, and these are, by the way, these are some of the scans. This is the cascading up scan, cascading down scan. This is a 5-minute scan. You can also do these. I also have these scans on a daily, but if we switch over here to 5-minute on SPY Super System, you can just click on these and they'll show you that you see the bullishness and dash right there. Carvana, see the bullishness. This is what it's identifying. It's identifying 3 or more green candles in a row going up. See right here is tractor supply. BST, this was bearish, but now it's just starting to put in candles, and vice versa on the cascading downside. Rivian moving down. So that's what this identifies, and you can use these on dailies or on 5 minutes to come up with stocks that have relative strength or relative weakness to the market. All right, there's Google right there on a 5-minute chart. Okay, but now what I want to show you here is I want to switch over to Heiken-Ashi candlesticks. So all you have to do is just switch my chart type from candle to Heiken-Ashi. All right, so here's Heiken-Ashi. Now, if we just look at on Google, for example, this is yesterday on Google. You see here, if we I need to really kind of expand this up a bit so you can look at it a little bit better. All right, so you see right here, see the VWAP right there, the pink line. This is on Google, right? This is at 10:05. See this candle right here? See how it has a tail on it? This has a tail on it. See how this has a flat bottom? That's a Heiken-Ashi reversal candle on the 5-minute chart right there. And it's got to pop out of the box signal. It's telling you it's breaking out. It's also breaking above the VWAP right here. This is a nice, quick 5-minute intraday trade on Google. Right here, you would enter on this candle and you would get out right here. You could stay in it. You could have stayed in it because notice the current time frame momentum stays green during this whole period. Doesn't get red, doesn't get yellow till over here. But this was your Heiken-Ashi reversal. That's where these are so important for Heiken-Ashi reversals to get into a trade at the beginning of a trend, right, like that. That's also confirmed, right? So that's Heiken-Ashi candles, right? And by the way, these green dots in the middle of the box, these are called acceleration dots. These tell you that the momentum down here is very bullish. Once you start getting dots, it's very bullish. But that's a trade on Google right there. Now, if you look at the difference between that and trying to trade SPY yesterday, trading SPY yesterday was very, very difficult. Now, there was a little bit here in the morning for a bit of a down move right here. Right, see the Heiken-Ashi reversal right there? And you follow it down. And so you could have made some money on this SPY trade staying below the 15 EMA right there and then get out as it reverses back up again right there. But I didn't trade SPY very much yesterday. I just traded it one time because it was so choppy. If you go back and look, see how it's below the VWAP, and then it goes above the VWAP, then it goes below the VWAP. It was a very, very choppy day on the SPY yesterday. And there's a pivot point right there. So I didn't trade. I only traded one trade yesterday in the indexes. I think I traded the IWM. All right. So I'm going to look at some. I want to look at some daily charts here for SPY super system swing type trades based on. Let's go to the daily. Yeah, based on Heiken-Ashi here. Now here's the SPY. This is what SPY looks like on Heiken-Ashi candles. You notice that the SPY went bullish right here, back here on the 7th of August, right here, right? So this was, if you were taking a swing in the SPY, this is where you could have taken it long right here. And it's still staying bullish, even though if I go to regular candlesticks here, it's going to look completely different, right? See how we're getting a lot more noise, but it's telling us, even when a candle like this yesterday, it's still telling us to stay in. But typically, I'm not swinging the SPY, I'm swinging other stocks. I'm swinging stocks like, let's see. We swung and had a swing trade in NVIDIA. I showed you that one before. Right, so these are regular candles. Let's take a look at where we would have got into NVIDIA on a daily chart. Right here. Okay, there's a daily chart. All right, so here's where we took that NVIDIA trade I showed you before. See how we get wicks and tails? Everything's green. They're buying it, but we're looking for the best entry. There it is right there. Heiken-Ashi reversal. Kind of didn't make any money there. Moved back up again. Then we started to make some money on the thing as it went up. But that's where you would look for a trade like that. And I had one I pointed out, PSX. This is PSX. Now this is a PSX on a Heiken-Ashi reversal candle. Let's see, let's go which style we got here. We want to go to Heiken-Ashi because I want to show you something here. All right, so here's the Heiken-Ashi. You see the Heiken-Ashi reversal candle right here on PSX, right? So it looks like this could be a decent bullish entry, right? But look at your multi-time frame momentum right here. You see how that's red? I can't take this trade long right now. This has got to switch over to blue or green before I can switch over to PSX. So that's, even though I get stocks that look like they're good setups because they have Heiken-Ashi reversals, I've got to confirm them with the SPY super system to let me know that all the indexes, all of the indicators are telling me to go long, all right? Ram Kumar, if Heiken-Ashi reversal happens, but below the VWAP, would it be a subjective call? Well, I mean, you want the price to close above the VWAP. If the Heiken-Ashi candle is going through the VWAP, and you look at a regular candlestick, it should be above the VWAP. If it's not, you got to wait for the regular candles to get above the VWAP. Does the VOLD stay yellow but show up or down? Well, this indicator is only going to be for the exact current time frame that we're in right now. If I go back in the chart, it's not going to switch back again because can't go back and look at those with the VOLDs. Those things only trade during the day. But it's gonna tell you what the market is conditioned right now, which makes it easier for you to take a long or a short based on the trend. Now, yesterday the trend was all over the place. This thing was going green, it was going blue, it was going red, it was going yellow. That told me that it was a choppy day, so I didn't really want to trade very much. But I just want to point out on the PSX, for example, this is a Heiken-Ashi reversal that is you can't really take. All right, so that's just so we see. Johnson & Johnson is another one that's showed up as a Heiken-Ashi reversal yesterday. Johnson & Johnson right here, beautiful. Johnson & Johnson would make a good long, all right, because we got a nice Heiken-Ashi reversal. We had a tiny little wick over there, but it had Heiken-Ashi reversals already. This is actually a Heiken-Ashi continuation. You've got a Heiken-Ashi reversal candle back here, and then you got one that had a tail on it, and then went back to Heiken-Ashi reversal. So this would be a beautiful one because your indicators are telling you J&J is a good long. Okay. Ram Kumar, if Heiken-Ashi reversals happen, stock above VWAP, SPY super system green, but the VOL deal is bearish, what would I do? Well, typically, if I'm going to the SPY super system, it's going to be a quick trade. I'm going to go ahead and take it based on the institutional being in there. I'm going to trade against the market internals at that point. But because the market internals are showing me the market internals for the whole market, right? But I can see what the SPY is doing, and the SPY is outperforming the market at that point. But I would obviously have to be prepared to take very quick profits in something like that. Okay, so those are some bullish ones. I've got one here that is let's see, TT. This was bearish. Let's see, we got a bearish Heiken-Ashi reversal candle. Let's see, we got Heiken-Ashi. Yep, Heiken-Ashi. Okay, Heiken-Ashi reversal candle right here. But look, current time frame momentum, blue. Can't take it. Can't take it yet. Got to wait for it to fall some more before I can take TT. ATI was another decent short one. The ATI breaking down. Heiken-Ashi reversal here, flattens out, another Heiken-Ashi reversal. Look at that. Institutions are selling it now. This went from buying to selling. They're already selling. This ATI becomes a good short setup for Monday morning. And I think I had one other one I wanted to look at. Yeah, Beyond, which is BYND. This is a very cheap stock. This is very inexpensive. And I can't take it because you see how this is blue here, but the trend is very bearish. But I can't really take it with that blue right there, so I pass on it. I mean, that's what I do in a lot of trades. I don't take them because the institutions aren't doing it. Same thing with Avis. Looks really bearish, but the institutions haven't started selling here on the daily again. They're selling across the 3 and 9, but they haven't started selling on the 1 day yet. So that's how I find them. I do a lot of those on my TC2000 charts. By the way, if this is my TC2000 chart, looks like. Yeah, this is. If I look at a daily chart here, if I look at one of the ones we looked at before was PSX, it's going to show on my TC2000 chart is a pretty nice setup. And if I go to Heiken-Ashi candle, it's right there, flat bottom. But I can't take it because the SPY super system is telling me that the institutions have not jumped on board this thing yet. It's still suffering from this big push down here. So you can try to take it, but you got to be prepared for what's going to happen is if you take a trade like that off the Heiken-Ashi candle when you don't have the institutions on the daily on the SPY super system buying yet, you're going to have more failures than you would have if you waited for it to confirm. Okay, so that's that. So that's the Heiken-Ashi candles. Does the system work on a 15-minute time frame? I think it does. Let me look at it. I know it works like on a 1 minute here. And 1 minute is fine. I'm not sure. I don't think it can work on every time frame. I don't even think I have 15 minutes in here. Oh yes, that's 5 days, 15 minutes. Yeah, it doesn't work on the 15-minute for the multi-time frame, but it does. This works the current time frame, which is what you'd be interested in if you were using a 15-minute candlestick. This is what you would be interested in, because we have another template, by the way, that only shows current time frame momentum for the intraday trades. It doesn't show any of these other ones. So for the 15-minute, this is what you'd get. This is what you'd be interested in right there, the current time frame momentum. These two don't matter typically when you're just trading for intraday trades. The thing is, there's a lot of resources being used up to do all the calculations when you start doing it across every single time frame. So again, it works on 5, it works on 1, it works on daily, and I typically just use the 5 in the daily for the trading that I do. Do I have any? Tahir, do I have any specific time frames of the day when I start taking trades? I usually wait till about 10 o'clock generally. I may take one sooner than that, but generally I'm waiting to see if there's any kind of a market trend I can follow. The only trades I usually use take in the morning is if I've got an overnight trade, swing trade of some sort, and I get a gap up or down. One of the rules that I have, and I say this in the room all the time, is gaps are gifts. When a stock gaps in your favor and you get a big move up or a big move down in your favor, take the profits. Because the least likely thing to happen is a gap and go. You'll get gap and go, so you would have had more money if you stayed in, but 2/3 of the time, the stock is either going to go sideways or go down. It might bounce again later, but you're going to get your maximum profits near the open. And one of the reasons is because the stock moved up so much or down so much that the volatility has been jacked up. So the premium prices are even have got moved up based on the volatility, which is going to get you a better price for it. 15-minute on NASDAQ or Russell as NASDAQ or S&P. I mean, you can do it for. I'm not sure what you mean by that, Jeffrey. 15-minute Russell or NASDAQ or S&P. The 15-minute. This is when you look at the 15 minutes, you're looking at what this is doing, what this stock is doing momentum-wise for that stock. This isn't comparing it to the market. This is comparing it to what the stock has been doing. In other words, this has got downward momentum, regardless of what the market's doing. It's just on the stock itself. All right, good questions here. Ram Kumar, if all the conditions like Heiken reversal, SPY super system alignment, but there is resistance above, would I trust to break the resistance? No, I do not trust it to break the resistance. I gotta have enough room to the upside to justify taking the trade. I'm not gonna make any assumptions that it's gonna break through resistance. Generally, they don't. That's why those levels are called resistance levels. Because if you're coming up against the 200-day moving average on the daily chart and you bump into it, it's going to take something special to get it through there. All right. So that kind of covers the Heiken-Ashi candles. I hope I knew we spent a lot of time on that, so that's okay. All right. So we looked at Heiken-Ashi candles. Now we're going to take a look at some trading results, and then we're going to take a look at some specific charts of actual trades. Okay. This is 2023, using $2,000 per trade in the room. We produced a profit in the room of a little over $60,000. Pretty good. I mean, these, we're not taking 200, 300, 400% a trade. We don't get that. That's not normal. You can't trade consistently with those kind of gains. But we do make some nice gains most every trade we take. So 60,000 in 2023. 2024, 2,000 per trade, about 55,000. And a lot of times the difference in the profitability is based on what kind of a market you've had to trade with. If you had a trending market more than a choppy market, the profits are going to be larger because you can stay in the trades longer. And this is one thing I wanted to point out. This is, if you remember back in April when the tariffs were put on and then the tariffs were paused. there was some tremendous market volatility. Quite a few retail traders I know actually gave up trading and blew up their accounts during that period of time because of the fact that the market came down so much. They shorted the market, thought the tariffs were going to stay in place. They caused them. They got trapped short. They went long when they paused the tariffs. Market reversed back down again. They got trapped there again. These are the only 4 trades we had on during that whole time. These were also alerted and in the room. We had 4 trades on. We were short these 4 stocks. We were short AVGO. We entered for $75 a contract, and we get out for $1.04. All right, 39% profit. So 2,000 produced a 754. Nike. This was a big, huge one for us. We were short Nike. We get in for $285 a contract. It closed for $9 for 216% profit. And again, Nike, we get in, and then the tariffs were put on. Nike dropped dramatically because they produced most of their materials in Vietnam, and there was supposed to be a 38% tariff on Vietnam. It just absolutely tanked. Right, so that was a big one for us. We had Sarepta on short as well, made about 78% on that one and 25% in NNE. These are the only 4 trades we had on, both alerted. It was all alerted and they were in the room. So the reason I point this out is the market was down 10% in 2 days, right? And we were up obviously a lot in 2 days. And that's what looking for high probability trade setups and not getting too overextended in any one direction can do for you. Okay. Oh, thanks, Andrew. Appreciate that. All right. So I'm going to just cover some results here, and then we're going to look at some charts. I know it's a long presentation, but I want to be thorough on this so you understand this, right? So this was June. This is past June. These are the trades I had. Again, I was on vacation for 2 weeks in June, so the trade count is way lower than normal. We were 10-1. We made $37.90 in profits in the room. And these are the trades. See, we had a Sarepta loss, but you can see what the percentages are. And I put this up here for a reason. These are the kind of normal percentages you're going to see on trades that you take. 15, 20, 30, 40% normal, right? That's what you're normally going to get. These were the July trades here. We had a bunch of trades in July, obviously. But again, see the percentages, 40, 20, 32, 52. Very consistent as far as profitability is concerned. NVIDIA, 19%. CBS was that was a time spread over earnings. That was 56%. Sarepta, we had that 166% strangle. Again, I tell you, I do quite a few strangles. All right, so that was July. July numbers were, this was our best month this year. 30 wins and 3 losses. That's a 91% win rate. And 2,000 invested in each trade produced 16,829. And these are the results based on when we took the trade, when we exited the trade, based on $2,000. Anybody who's in the room and took these trades did profits. Is going to be very similar to that if they use 2,000. If they used 1,000, they'll be half of that. If they use 4,000, they'd be double that. They should be very close to that, right? Because we post I post when we get in, when we get out. All right, so that was July. In August so far, I haven't listed the initial all the trades yet, but we've done 12 wins, 2 losses, 86% win rate. This is normal for us, 86, 88% win. 2,000 invested in each trade so far. It's produced 4601 in August. So pretty good month. This was an outstanding month. Don't expect this every month. This is not normal. This is very, very unusual to get that kind of profits. It usually runs somewhere in the neighborhood of between 2,500 and 7,000 normally. All right, so I'm going to just run through these quickly, and then I'm going to get to some charts. This was January of 2024. And again, the reason I show you this is to see the percentages. See how they don't vary a lot. We did have 96% Boeing, but this is a pretty nice consistent grinding out, small percentage after small percentage after small percentage. They add up. So we did 90% win in January. February of 2024 was pretty big, 92% win rate, 11,745. A pretty nice run there. But again, see the percentages, not much variation. And we have losses each month. I think I've only had 1 month with no losses, but there's going to be some losses, obviously. This was May, a lot of time spreads. Again, you can see the consistency here. And that's why I want to show you these. June, very consistent, 86%. Alerted, 92%. July, again, very consistent, every month. August, 17-2. 89% win rate. And then this was my losing month last year. only one. This was September last year. We took 13 trades, 8 wins, 5 losses, 62% win rate. Horrible. I mean, horrible. This was, for me, this is probably the lowest win rate in 3 years or 4 years in a month. But we only lost $1,786 because we had some decent, some of the winners were pretty nice. And on the alerts, we lost $295. Pretty small numbers compared to what we got for wins. And then we bounced back in October, right back again after 74.48 in the trading room, and up 6,000 on the alert service, right back up to 85% again. See the consistency in the percentages. All right, I'm not going to go through every one of these. This was January through April of this year. Again, I just summarized this: 15 and 3, 84, 89, 83, 85. This is the kind of percentage win rate you're going to see month after month after month. I mean, I've been doing this a long time, and it doesn't vary an awful lot. This is just kind of to show you what the alerts look like. You're going to get an alert. Initially, it's going to say like the date. It's going to say the stock symbol, Nike, buy the April 11th 67 puts for 285. That's what the whole alert would look like when you first get one. Then you're going to get another alert that's going to have this on there, and then it's going to say sell order for $9. And then when they're sold, you're going to get one that says they were sold for $9. Now you could get some other ones in between here that may tell you we're going to change the sell order to $9.50 or change the sell order to $8.50. There can be some modifications, and then you'll get the one to let you know that it was closed out. Okay, for the alerts. And again, how do we achieve these stunning results? I think we know now. We're able to identify when institutions are driving a trade and when the market internals are heavily bullish or bearish. Right? And I only take trades when both of these are in our favor. That's not 100% true. I will take trades when the institutions are in the trades if the market internals are neutral. I don't want to go against the market internals for a swing trade, but we'll take them if they're neutral as long as the institutions are in there. All right, and again, we do triple screen assessment of momentum. I showed you that. Also does trends. There's some money flow that gets looked at as well, but the momentum is the key thing. All right, and again, here's this chart we looked at. This is the SPY Super System trades. This is a setup on Thinkorswim. You don't have to trade on Thinkorswim now. It's important to understand. I don't trade on Thinkorswim. I trade on Tradier, but the software gets loaded on Thinkorswim. You buy the software. Rightline will put it on there for you for free. You buy the software, they'll put it on for free. You don't even need to pay for Thinkorswim. I think you can just download the platform for free. And it also runs on Ninja 8. It also runs on Ninja 8 and Thinkorswim. Those are the only two pieces of software that it runs on. But again, you don't have to trade off of Thinkorswim. All I do is look at it to get my indicators, and then I trade on Tradier. But you can use Tastyworks, you can use Thinkorswim, you can use you can use Fidelity, you can use whoever you want. Now this, by the way, is a new template I had referred to. This is for anybody who's trading SPY Super Systems for 5-minute trades. Okay, so you're going to be in this for for 1 candle, 3 minute candles, maybe 5 or 6 candles, but you're only interested in 5-minute trades. This is what you get. You will have the market internals up here on it, but it's just going to show current time frame momentum because that's all you're trading off of. You don't care about the other two. So you get both of these templates, this one and this one, and you can flip them back and forth during the day. But if you just focus on intraday trades, you can just keep this one up. I mean, the information is the same. It's just that this is just focused on just the current time frame momentum. Okay. Here's a SPY Super System trade we took in the Qs. We took it right here. See, as it comes across here, it starts to break down below the 15. See how it goes from buying to selling, green to yellow, right there. This is where we took it, and we rode this thing down. I don't know what we got out of this. We were still in it because it was still below the 15 coming down. But again, this was an intraday trade using 5 minutes. This is all you needed right here. Notice how this thing went from green to yellow, went red. Just stay in the trade. The institutions are selling the heck out of this thing. I'm just going to run through quickly. For anybody who's interested in the SPY Super Systems intraday trades, trading off the 5-minute chart for the SPYs, the Qs, the IWM, or the futures. And you can do it for gold and oil if you want to as well. But these are the results that I've had. Now, these are my results because I can't post these and I can't alert on these. But this is the results that I've had using the very SPY Super System trade off the 5-minute chart. and all my trades were in the SPY, the Qs, or the IWM. So with July, I did 16 and 0, $2,500. August, 56, 6 and 2. You see how many trades you can take if you get some trending days. And that was 8,200. September, 40 wins, 3 losses, 2 scratches. In October, 33 and 4. Now the key thing to remember about the SPY super system, if you like to trade intraday quickly, I'm not going to call it scalping because it's not really scalping, but these are quick trades. You're only going to be on one trade at a time, and they're going to be very short duration, but you have to watch them. Unless you're putting an OCO in there, if you're putting in one cancel the other, you're putting a profit target and a loss target in there. I watch the whole thing. I watch it, and then I manually exit those trades when I want to, right? But you're only in one at a time, so you can watch it. So a lot of people can't be in the room all day because they're working or they're doing other things. They'll come in the morning and they'll do some SPY super system trades, and then they'll come back in the afternoon for another hour or so, and they can do some more. It gives them that flexibility. All right, and again, this was November, this was December. I haven't had a losing month in SPY super system trades. This is just a recap of October, November, and December. Now, it's important to understand that the SPY super system trades that we did 48.31, that is not included in this. This is completely separate from the room. These are my trades. These are the trades we posted in the room. If you were taking trades in the room, this is what you would have. This is about what you would have got. Okay, these are the ones that I took, and I called out a lot of them. But that doesn't mean you would have done the same thing. You could have done better. You could have done worse. It just depends because they're very, very quick trades. But you do have the high probability setup of knowing when the institutions are in and following the institutions into those high probability trades. And there's November, 9,300, 7,300 in the room. December, 10,000 on the SPY super system, 4,500 in the room. And again, this was the last quarter of last year, October through December. I had 24,651 in profits in 3 months, SPY super system, and 17,000 in the room. And again, this, if you were in the room, yours should have been, if you took all the trades, this is about what you would have done. All right, so that was the total. But again, this is my trades. I want to be clear about this. This is not trades I post. I can't post them. But you can learn to do it. And I got a webinar on a video on how to find the right setups. And we do talk about it all day long. All right, so here's some trades. Here's the SPY super system trade. These are SPY super system trades. And this whole point is just to show you how this went from selling to buying right here. All right, I took the trade right here as it went from red to blue. It moved above the VWAP. I took it right here. And in a 5-minute trade, we just followed this thing up, stayed above the 15, stayed above the VWAP. I stayed in it. This is where I exited the trade. That was $220 per contract. That's a lot, by the way, on a SPY contract, one contract. That's a lot. When the markets are more choppy, you typically don't get runs this big. Typically, most of my SPY super system trades are anywhere between $80 a contract to about $120, $130, because usually you're getting, the market's chopping around a little bit. But that was a pretty good trade there. And this was another good one here, but I was only in it for 2 candles, in here, out here. See, it's breaking down. See how it's red here, breaks it here, and pop out of the box. I take it, I get out right there. And there's a Heiken-Ashi reversal candle, if you notice that. All right. And again, that's the same thing again with this is the new layout that just shows the 5-minute current time frame momentum right here. That's where I get in. So went to yellow. This is where I get out right here as I put a big tail on it. Okay, same thing here. Another nice run right here. This is where I took it when it went green. I kind of missed it because I couldn't take it on this yellow. I took it a green right here and rode that up. And that's using the new template. All right, so I'm going to zip through some of these. You can see the setup that we're talking about here. This was good for 130 on the SPY. Again, you get in right here as the market compresses, pops above the 15. Everything's green. This was an old template before we had the actual oscillator at the bottom. Say it's another SPY super system trade here, but I think you can see what we're seeing here is a SPY super system short right here, breaking down below the VWAP right there, pop out of the box. You take it right there, you write it down. Now the VWAP goes out of play and the 15 comes into play, and this is where you get out as it starts to bounce. And you notice it went from red to blue, so you're out of the trade. Okay, so that's what they look like, and I'm not going to spend too much more time on these charts because you can see these charts. There is one I want to show you. This was a SPY trade I took You notice it was red here, they were selling it. I took it short here as it broke below the VWAP. I wrote it down. I get out right here as it bounced. I get back in long right here as it bounced above the VWAP and it went blue right there. Get back in and wrote it up here to the pivot point. So I made money on the downside. I made money on the upside. Okay. Again, you need to be able to read price action, and these are not easy trades. I mean, you've got to be fairly quick on these things. Okay. So there they are. Now, these are some of the recent trades we've had. This was regular trades. These aren't SPY Super System trades, but this was a line. This was a beautiful trade in the line. This is a 5-minute chart on the line. You notice the compression. You see the VWAP right there, right? You see how the price breaks below the VWAP with the pop out of the box signal right there. See how we took it as it went from green buying to red. See how yellow selling right there. So we went from buying to selling. See how this oscillator is coming down right there. It's yellow. We take it right there, and we just ride this thing down, and we get out down here as it starts to flatten out. 51% in an hour on this aligned trade. This was a beautiful trade. I mean, the institutions are selling the heck out of this thing. Notice the momentum starting to curl back up. No reason to stay in it when that happens. All right, and here's URGN. This was on a day trade that we get in here and get out here. This one we get in as it was green. We were looking for a compression break. We got this move out of compression here, but we were in it for a while and it didn't really go anywhere. We were pretty much flat until this day. Then we got a pop on URGN as institutions pushed it ahead a little bit. One thing to understand is on the current time frame momentum on a daily, as it switches to a color, it may be indicating that this buying is coming in, but it may not be reflected in the price yet. Sometimes this will give you an indication that there's going to be some price movement soon. Okay. There's NVIDIA. This was a nice one we took here. Get in here, get out here. Again, that's the one I showed you before. That's the PBO, a pullback opportunity. Bounce right here. Everything's green. We're just waiting for it to line up for us. SMR, showing you this one right here. Yellow, selling, green, buying. Pick it up right there, write it up. That's what we did. Nike, this was the big short we had. We took it right here. We actually had profits that day. We stayed in the trade. It moved sideways. Notice it was really the selling was pretty heavy. We stayed in the trade, indicating there's likely to be some sale. And here comes the tariffs, and boom, we're out of it right here on this gap down. Gaps are gifts. When you get a move like that on a short, you're not gonna. I don't hesitate. I take the money right at the open. Best price I can get for it. All right, and this Sarepta, this was another one we had during that time. Again, right here is where we get in as it pulled down. And again, nice profits in Sarepta. Selling the heck out of this thing. No question that institutions are selling this. This is what the SPY Super System tells you. This was one I took on HIMS. I really didn't do a very good job on this trade. I should have taken it right here when it turned green. The VWAP, by the way, does not count. I don't use this on a daily chart. This is where I should have taken the trade. I didn't. I don't know if I just didn't see it. This is where I took it as it was above the 15, and then I wrote it up here, and 25% profit. I did leave a couple of runners on, but I didn't. This to generate 269% profit, but I didn't include this in any of the results. This was just my own runner that I left on there, and I don't want to skew the results unfairly. Right, Palantir right here, daily chart, compressed right here, goes from selling to buying right there on that candle. That's where you take it right there. We get out right there, 31%, 2 days. Beautiful, beautiful trade. Lulu, another beautiful trade. We didn't take it on this gap down on earnings. We waited for the compression. We waited for the stock to break down right here. Notice it went from multi-time frame momentum, which we use on the daily chart, to selling, from buying, blue, selling, yellow, take it here, write it down. Overnight, in for 192, out for $300 a contract. Okay. Nice one. Amazon, this was a 5-minute chart on Amazon. You can see the green down here. That's all I'm interested right now. I get a pop out of the box off the 15, I take it, and I write it up, 32%, 45 minutes. ENPH, another beauty. I mean, you can see that how these things are telling you what's going on institutionally. That's the key thing right here. There's 20% in an hour on that one. There's Verizon, 50% in an hour on that one. The selling was feverish on this. All right, and there's Tesla. This was an overnight trade we took. It was bearish on the daily, bearish on the 5-minute. We took an overnight, quit on it, and it dropped the next morning from 120 to 112. Okay, so that covers the charts. That covers the strategies we use. It covers Heiken-Ashi. Again, here's the strategies that we take in the room. These are the ones that I take. These are the ones that you can take yourselves. I don't post them. Everything else is posted. Okay. Now, as far as the offers are concerned, there's 3 of them here. All right, and these are the 3 they offer. Obviously, if you would want to take a different time on something like a year or something like that, you can just call Rory and he'll take care of it for this. But this is the first one here is just get a free 2-week trial, which gets you the alerts and my trading room for 2 weeks, and you also get all my videos, the training videos, so you get all those in your room. And then it switches over. If you don't cancel, you obviously can cancel anytime. It goes to $396 a quarter, which is really, you look at what the profits are. That's pretty cheap. You get the 2-week trial and then it goes to quarterly. There's a one-time payment for just the text. So just if you want to get the alerts forever, those are $24.96. But if you want to get the best deal that I've ever seen, this is a one-time payment of $24.96. This gets you the SPY Super System software and all upgrades to it that come along, any changes, all the scanners. You get everything that comes with that. You also get access to the live trading room. All right, forever. Come and go as you please. You also get the videos, and you get access to the Discord. We have a Discord room with 2 additional professional traders in there that train as well all day long. You get all of this for $24.96. This is to me, this is a no-brainer. The software is worth way more than this. I mean, I'm not putting price. I know a lot of these webinars you go to, they put these ridiculous prices on stuff. Yeah, you know, it's $27,000. No, listen, this thing is worth way more than that for what it produces, and for you to get that kind of an edge. So this is the one that I recommend. Now, if you want to do something different, you want to get it get the room for a year, or something like the software for a year, but not for a lifetime. You call Rory and talk to Rory right here, and he'll fix you up with whatever you want. All right, because this stuff is really you should have seen the results. And as I mentioned early in the presentation, the results are coming from the SPY Super System software. That's what telling you what the institutions are doing. That's where this comes from. All right, so this is a great one. If you want to just try it out, you can take the 2-week trial and see how it works, or you can just do the one-time payment for the trade alerts. I trust alerts. This is, to me, this is the deal right here. This is really a good deal. I mean, when the SPY Super System came out, I bought it. You know, I didn't have a trading room at the time. I bought it because I found something that was, I tested it over 3 months, and I was able to increase my percentage win rate from 80 to 82% up to about 88%, based on not knowing if the institutions are in the trade. So it made a big difference to me, so I think it would help your trading a lot. All right, so those are the offers, and I would recommend hopefully somebody will take some advantage of this to get you in the room. Again, if you have any questions, Rory right here, 786-732-4656. If you go to the chat box right now in the webinar, there'll be a link there to what we've got right here. Right here, as far as these offers are concerned, there's a link there to the offer, so you can take it right there. All right. Okay. Let's see. Is there a trial in the software? No, but if you go into the room, I have the software up there all day long. So if you're in the room, even for a trial, you're going to see this all day long. You're going to see the software. You're going to see it working. But they're not going to give you the software for free to try out. No. Okay. All right, so those are your offers. I want to thank everybody for being here on a Saturday. Thank you so much. I really appreciate it. Look forward to seeing some folks in the room next week. We get started again on Monday. I usually get the room started between 9 and 9:15 each day. I'm in there all day long. I do take an hour for lunch, but I'm in there all day long, answering questions, posting trades, making recommendations on trades, or telling somebody to trade, that's an awful trade, don't take that, whatever. we go through all of that stuff. But thanks, Ram Kumar. I appreciate that. Appreciate that. Rodney, thank you very much. Appreciate it. Thanks for being here. Appreciate you spending a Saturday. Again, thanks everybody for spending a Saturday, part of your weekend time with me on this webinar. I hope you found it worthwhile and look forward to seeing a lot of you folks in the room. Have a great weekend.